Stay ahead of the game with our weekly economic insights, where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. Let's start with market indices. For the week, the BSE Sensex rose 0.9% and the Nifty 50 added 1.2%. The market started on a strong note but quickly erased all gains, trading in a negative zone for most of the day before closing near the day's low on April 26th. Despite mixed global cues, the selling pressure intensified, dragging the indices down. Moving on to new IRDAI rules for your health insurance age. IRDAI, the insurance regulator, has removed the 65-year age cap for buying health insurance policies. That means if you are 80 or 90 years old, you can now get health insurance regardless of pre-existing medical conditions you may have. Big relief for senior citizens. No more worry about access to quality healthcare. Insurance companies have been directed to design unique health plans specifically for senior citizens, students, children, and others. So whether you are 70 or 90, you can now easily buy health coverage tailored just for you. Shifting gears to new mutual fund KYC rules. New rules kicked in on April 1st and they will make your life a lot easier. You must complete your KYC, that is Know Your Customer process, using your UID and PAN cards. Suppose you have done your KYC with these documents. In that case, your status will be validated, allowing you to invest in any mutual fund schemes you want. Isn't that convenient? However, suppose your KYC was done without PAN or Aadhaar and you used other IDs like your passport or voter ID. In that case, you can only invest in the same fund house you're already invested in. In that case, your status will be KYC registered or verified. You'll need to update your KYC to invest in new schemes. And if your KYC status is on hold, you won't be able to make any fresh investments or withdraw until it is resolved. So, could you check on your KYC status and get it validated before April 30, 2024 to avoid any hassles? Moving on to RBI's action against Kotak Mahindra Bank. The Reserve Bank of India, which is banking regulator, has put some restriction on the bank due to frequent technical issues and outages, including a major one on April 15th. Now, Kotak Mahindra Bank has only issued new credit cards and opened new accounts through online or mobile banking channels once they fix the problem with their computer systems. You don't have to worry if you're an existing customer. You can continue using your accounts and cards as usual. However, to become a new customer, you must visit a bank branch to open an account or get a new credit card. The RBI took this action after its audit found that the bank needed to correctly address concerns about its computer systems. So Kotak Mahindra Bank must hire an external company to thoroughly check its IT system and make necessary improvements before the RBI lifts these restrictions. Switching to India's efforts to promote electric vehicles. India's effort to promote electric vehicles are speeding up, and we should all be thrilled about it. The central government is setting up a special task force to create a roadmap for the EV industry that aligns with the vision of making India a developed nation. Can you imagine that? Our very own country is a global leader in e-mobility transition. Car makers, industry bodies, and government agencies will work through the workshops and meetings to gather ideas and recommendations on EV adoption and building charging infrastructure. The task force aims to address challenges like skill gaps, manufacturing capabilities, and setting up charging stations. This move comes as a demand for electric cars and buses increases, driven by environmental concerns and supportive policies. With significant investments planned, India is gearing up to become an EV manufacturing hub, promoting sustainable transportation solutions. Isn't that exciting? Moving on to a new product offering from the National Stock Exchange. Do you guys trade in derivatives? If yes, then this news is for you. The National Stock Exchange has received approvals from market regulator SEBI to introduce derivative contracts on Nifty Next 50 index starting April 24th. This new offering aims to complement NSE's index derivative products, catering to investors interested in the space between the large cap Nifty 50 and the mid cap Nifty Mid Cap Select Index. The Nifty Next 50 Index represents 50 companies from Nifty 100, excluding the Nifty 50 constituents. Exciting times for traders, right? Turning to the rising tension between the US and China. Tensions are rising between the US and China as the US is preliminarily discussing potential sanctions on some Chinese banks over their alleged support for Russia's war effort. Washington accuses Beijing of providing dual-use trade that has helped Moscow rebuild its military capabilities. While no immediate action is planned, the US hopes diplomacy will help avoid such measures. However, this move highlights growing concerns over China's perceived backing of Russia amid the ongoing conflict in Ukraine. It's a complex situation. We'll have to wait and see how it unfolds. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remains the same. The financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.